Welcome to the Trading Lounge and the Day Ahead Report, and here we're looking at the S&P 500, and the correction across the 1500, the medium level, is going pretty much according to plan, and the move down from 1510 is just the A wave of the correction. There will still be the B wave to come, which will be probably a rally tonight. We had positive ADP figures on Wednesday night, private employment, so we should see positive non-farm payrolls tonight, but you're going to be short about those sort of things. But look, we're looking for sort of a three-wave correction like this. Once that's completed, then we'll see a move to the upside in 5 waves to the upside. Once that 5 waves is completed, however, then we should see a larger correction occur. So the normal thing is when you get to large levels like this, you get a reaction, you get the smaller swings, and the swings just get larger and larger. So that's kind of what we're looking at. So it's very tricky to be trading long in this little section here, even with stock and so forth. We'll get our good run. We'll probably get a few shorts out of this, but it's this run here when we'll make money again. So just kind of keep that in mind when you're doing your position sizing for the robo trades on the local market or the UK or the US. So just exploring that little pattern there. The reason that we know that we'll get this pattern here is because we've basically got 5 waves in this pattern through here. So when we look at the S&P 500 on the 20-minute chart here, we can see that we've got, it's a little bit tricky. We can see that we've got a correction here. So in here somewhere we've got the wave 1 and the wave 2 here. This is the wave 3 because it's nice and long and so forth. The complicated wave 4 here, so the wave 5 here. So this is probably the B wave moving to the upside now, which would normally pull back up 61.8% of the length of the A wave here, and it's normally in 3 waves. The way I like to look at it is I understand that the corrective pattern here would have high volume turnover, people buying and selling and stops getting taken out and all the rest of it, and they will occur between numbers and the 5 and the 8 of those numbers there. So that would be the supply, that would be the target zone. So we should see some sort of correctional pattern through here. Once that's completed, then we'll see a move down into the C wave here. And the C wave, depending on how far the B wave goes up, will depend on how far the C wave goes down. So if the B wave doesn't go up very much, then we can expect the C wave to go down lower. If this goes higher here, then we know that the B wave is strong, so the C wave will probably test the 1500 as support. This is the same for the Dow Jones as well. The 5 little waves down through here as part of the A wave, the B wave and the C wave, and then we'll be looking for the first high above the level in terms of the 14,000 for the Dow Jones. Now, the European markets are the same, and the same for the Australian market as well. Have a quick look at the European markets. The DAX is just working across the 7,800 here, so work that with the S&P 500. The UK market doing the same thing as well. This structure down through here will be the A wave. It's working across the 63 here, so this will be an A B and a C wave, and then support on here. So the trade is still 2 sessions off yet as well. The same with the Australian market as well at the 4,900 here. It's correcting in line with everything. So similar but different, same but different. But expect further corrections across here, and it's doing all the right things here because the 4,900 obviously is the closest largest number, so that will become the balance point, and then group 2 below that will be support, and the group 1 above will be the resistance through here. So look, it's just really had its arrival. We've got been sort of looking at the wave structure to the upside, so we're just looking at a larger correction across here. So be very careful in terms of trading through here. You can have to trade shorter time frames, but I suggest also smaller position sizes as well. And the trade's not there yet. This is a retest of the 5,000 as well, so there's still further upside to come in all of this. So if we look at our local market here as such, it is obviously everybody's talking about a bull market now, but it's not really a bull market, but it's got the hallmarks of one, because as we talked about yesterday, this is just all squashed up here, but basically an A wave, a B wave in 3 waves, and this is always a little bit confusing down here, but the trading levels, the medium level and minor group 1, 100, 200 and 300, getting support on that, that will get to the next point, which is the 500, and it's away once the market's above the 4,500, then the weight gets shifted towards the 5,000. So we know the 61.8 retracement levels up at the 5.4 here. We know this is a C wave moving up through here. It's just a bit sort of complicated down here at this point, but what we're sort of seeing here is we're seeing this really strong section in here, which reminds us of the 2003 to 2007 bull markets in terms of the way that it's moving up through here. But we can see that this is a really strong move up through here. So we could even be looking at this as this sort of structure here. This would be pretty close to what we're sort of looking at here. So in one way or another, at the 5,000 here, we're looking at a wave 4 correction unfolding before we see another 5 up. So when we look at this little bit in through here, we can see that from this last low here, we can see that this is a little building process here. We can see that that's quite strong there, isn't it? So that's like a little 3rd wave in there. So this will be a little 4th wave here, lining up with the S&P 500 if you have a look at the 4-hour count in that. And then we'll see the little 5th wave go up through here, and then another one up here as well, perhaps to look for the top in here. But look, we've hit the 4,900, so the normal classic trading levels pattern, or the Elliott Wave thing. There's many roads to Rome, many ways to look at things, and we all have our preferences, but at the end of the day, there's some type of correction going to be unfolding here, and you want to wait for support there. I know that if you've made money in a trend, then you tend to be attached to that market, and that could be attachment can be a dangerous thing. As they say in spirituality, attachment can bring sorrow. I don't want to be too negative about the situation, but it's best to trade to the closest, largest number, get out, wait for the correction, because that's the foundation for the next trend, and then move in from that point. Alrighty, let's have a look at the commodities as they are being sold off as well, but once again only as part of a correction in a more bullish market. Just looking at oil, this is Brent here. Not that we normally follow it, but I always like to keep a bit of an eye on it. It's at like a little medium level through here, so it's going to have a corrective pattern through here, and this would line up with. I'm using this because this market was leading to the upside. It was leading the WTI up, so it became a valuable sort of indicator, I guess. But it should have a correction across this thicker line through here at the 5 being the second strongest number. So that lines up quite nicely with WTI at 98. 8's a profit-taking number, first even number before the next whole number. So it's just natural to see that. This move down through here appears to be corrective, and it should line up. Oil follows stock, so it should line up with what the S&P is doing, and we know with the S&P 500 we've still got like 2 legs to go, so that's possible here. So we're still looking for another little move up through here to make the wave 3 up through here, where we'll see a larger correction in line with stock. The base metals market pretty much doing everything that we expect it to do. You know that this is obviously pushing up through here, so I haven't pulled this apart through here, but we're looking for an impulse wave to the upside. We can see that this is a big strong 3rd wave through here, can't we? That's the strongest part of the trend so far. So we know that after a strong trend like this, after a 3rd wave is completed, we'll be looking for a 4th wave here. In this case here, the market was working with the 365, the lower level of subgroup 2. In this case here, it will be the 72. The normal retracement level is 40% back, 38.2. So but there's other things that can sort of influence that, but we should see a swing down through here. This correction in here was simple, so this one here could be more complex, but let's just see how it holds up. Just allow this to have its first swing and second swing, and we'll be able to pick up the thread. We can pick it up earlier. This move down through here, if it's in 5 waves, then we know that we'll get a 3-wave counter trend and then another 5 down. If it's in 3 waves down, well, then it can go make a new high straight away, or the 3 waves could be part of a triangle, which is very common in wave 4s, and wave 4s can be complicated, and they're normally complicated, and the reason for that is because if you look at it in terms of I look at it in terms of emotion, because you know, markets are from the minds of man. So this strong move here took a lot of energy, so it was a large event, and you know, it needs recovery from that. So the wave 4 can normally be sideways and complicated. So it's just an unwinding of that energy, that time. As well, that power. So, but once it's completed here, we should see a move further up here in line with our larger 1, 2. This has just be the 3rd wave up to here, the 4th and the 5th. So we've still got more upside there, but as you know, BHP and Rio are still moving sideways in their ABC correction, so they're not ready to rally just yet either, and they won't be now as well, because we know that the S&P 500 is moving through its ABC correction across the 1500, so they're all tying in quite nicely, and the currencies will be tying in with that as well. The gold market here, the move up through here that we had, which was really the target was up in around the 1680 here for the 61.8 retracement level of this move down through here. This move up through here is in 3 waves, so that's a corrective rally. So it rallied on the headline news of the Fed's perhaps doing more stimulus or whatever, but that failed to emerge. So it's just, you know, it's come back to its thing. So basically what we're looking for now is a move down through here in 5 waves. That's just the 3rd wave down. So there'll be a 4th wave here, a 5th wave here. Then there'll be a 3-wave counter trend here. Okay, after that 3-wave counter trend here, and these are the supply levels moving down, so the 1672 should nail that. Then it should move to the downside through there. So there may be a worthwhile trade coming up through here after this bounce. So this 1, 2, 3, 4, 5 down through to here. We'll track it on the intraday, and then the 3-wave up here, a 5, 3, 5 structure. And then what you need to wait for on the 5-minute chart is the first little 5-wave structure down, and then the 3 waves back up, and then as the next one starts to go down, you'll work with the closest largest number, whatever that may be, and then you just scale in from there. But the larger trade, building the trade, is building the trade, getting a few positions up here in the right places, but building the trade once the 1650 becomes the retested resistance. So this market moved down through here, and as you know, we don't chase markets through the levels like that. We wait for the retest. If it's a failed retest, then the market will roll over, and that's when we start to look at it, you know, start to build into positions. But in this case here, the retest didn't fail, because the breakout is important, but the retest is more important if you're, you know, looking to build into the trend to the downside. So we need to see a failed retest over here this time. So it's just something to look for. Let's have a look at FX. Okay, the US dollar, the all-important US dollar, it's moving into Group 1. So when you're coming into Group 1, the 10, 20 and 30 of the closest largest number, as I mentioned before, the orders tend to build up around these particular numbers, 10, 20, 30. So it can be a bit of a rough ride coming into this sort of area through here. We don't normally trade down into a Group 1. We'd certainly trade up through Group 1. But also too is that after a strong move like this becomes like a 3rd wave coming down, just like we talked about, then we get a more complicated structure, and that's what we're looking at through here. So this wave 4 here and wave 5 down through, I haven't pulled that apart in here just yet, but that will be completing shortly because it's moved down below the wave 3 line through here, the little ABC here for wave 4, down for wave 5 to make 3, and then we'll see wave 4 pull back to the wave 4 of 1 lesser degree, or 38.2% of the move down through here. That's just the textbooks, but the way that I sort of see it is that group 1 here, its job is to trap the market to the closest largest number through here. But look, there's not a, while this is rallying through here and doing its thing through here, then we're going to see that sort of reflected obviously in the euro, but also it affects other markets as well. So well, most markets. So yeah, look, choppy price action through here, and this is also going to reflect into our robo trading on the Australian market and the US market and the UK market as well. So we've had a good run with our trading on the robo, but now we're going to be into choppy price action. So for if you've made money, then it's a time to use smaller position sizing. And even taking less trades and so forth. If you're new to the service and you're just sort of coming on and you've seen that we've sort of made some money there, you always get the opposite of what's sort of going, what we're looking at. So if you're looking at a trend, then you're going to get a correction next. And so those new people will be just understand that we'll be going through some choppy price action. So just to bear that in mind, but once that's completed, then we'll be looking for the next trend again. So there's a time to be, to add a little bit more to the markets, and a time to reduce. And as the market's expanding and contracting, so should your money management and your thinking as well. So the euro is doing the mirror opposite here. So yeah, it's pretty sort of simple. So after this little A, B, C correction here, we're looking at 5 waves up here, the 1, the 2, nice strong 3rd wave, the 4th wave here, and the little 5th wave here. So we're looking at, there'll also be 5 waves in there. It may not be finished. There may be support here, one more push to here, then that wave 5 will be in there. We need to pull that apart. Yeah, anyway, pull that apart. And then once that's completed, we're going to see a larger ABC correction through here, okay? If that pushes up through there, then that ABC correction will be across here. But look, the main point here is that after 5 waves, then we get the ABC correction. So if that's the top there, then we're going to get it here. If there's one more little push through here, then it's going to be up there. I'll just see if I can see that on these charts here. Just bear with me a second. No, I don't have it here. Just go under here. No, don't have it. So sorry about that. Okay, the Australian dollar. We're looking at the Australian dollar. We're still sort of being under the 5 here, not support there. We need to be, that's the closest largest number in that case. If you're working down here, then 104 is the closest largest number. So, but what we're looking at here is it's not a very clear wave count, but we can work out that we've got a 5 wave structure here now. So we should be looking at an A and a B and a C here for wave 2. So we'll look at this sort of area here first. But as I mentioned yesterday, any move up through here would be a retest of the 105 here. So I think that this move up here is positive at the moment. So like the A wave, the B wave, and the C wave. But I think we should just sort of chill out, because when a market bounces off support here, it does its first bounce, then the second bounce here can normally be lower than this one here. So if that's like a ball bouncing, how the second bounce is lower and then lower again, and then if that's the case, then we know that we're going further down that way. So I think there could be a nice 3rd wave trade coming down here, but we just need to get the market in the right position for it. So just be a little bit careful there. I mean, any long trade that's going to go from here, you want support on the midpoint here, the 104.50. If support is found on the 104.50, then you can trade up, take part profit at 65, all the profit at 72, wait for 72 to become the support, then scale back in, add on the 80, and then moving out close to the 105 there. If that's not the case, and the market actually moves back down into subgroup 1 here, 10, 20, and 30, then it's likely to get trapped in here. The point of entrapment is the pivot within group 1, which is the 20, so the 104.20. If that becomes the resistance, then you know you're going to be back at the 1 and below the 104 there. So just give that a little bit of time. But I would kind of leave this alone until it gets set up here properly and we can look for a good setup there. Yeah. Alrighty. Well, that's it. So, you know, it's just going to be a little bit tricky trading through the just the ASX 200 here. You know, we're looking at a corrective pattern across all the indices through here. So it's a tricky thing to trade. You know, we've made money going up, which is great, whatever. But now the correction here, you don't want to. If you make money in a trend, you don't want to give it back in the correction. So you need to be the detached observer and watch the natural flow of destiny unfold in front of you, but not being sort of sucked into it. So there's a time for being patient, and that's right now. And once we've got support here, we'll be looking for another little 5 waves up, and then. Yeah, then we'll see a larger correction at that point there. So anyway, that's that. Welcome to February. Good morning, good luck, and enjoy the day ahead.